Hi everyone, it's Dale here. I've been trading since 2009, that's about 16 years in the markets now, and trust me, I made a lot of mistakes along the way. I went down many dead ends, wasted time, wasted money, wasted energy on things that simply don't work, and today I want to give you the shortcut. So these are the most important lessons that I wish I knew when I started trading. The first lesson is that indicators don't work, at least not the way beginners hope that they will. When I started to trade, I believed that there must be some magic indicator, a holy grail, the perfect combination of settings that would tell me exactly when to buy and when to sell. So I wasted a lot of time searching for it, and I kept installing new indicators, trying new settings, tweaking the settings, adding more and more lines to my chart, and I thought that once I find the right one, trading will be easy, right? The indicator will do the thinking for me. That was the goal. That was what I was striving for. But here is the truth. Indicators don't adapt to changing market conditions. They use only two inputs, past price and time. And that's it. Every indicator is just a different visual of what already happened. So basically, you end up with 100 different ways of showing the same old data. And that's why indicators fail. But honestly, almost every beginner goes through this phase. It sounds so tempting, right? Find the right tool, make easy money, no hard work, no thinking, just signals. But unfortunately, it doesn't work that way. So if you want to make money long term, you actually need to understand the market. You need to learn to read the price and what's happening behind it. So here is how I would restart if I began again. I would delete every indicator on the chart and I would start fresh with a clean price chart. I would only recommend to start again with one tool, that being the volume profile tool. Now, volume profile isn't just another indicator that gives you buy or sell signals. It doesn't really tell you what to do. Instead, it shows you market structure, a sort of 3D dimension to the market. It shows where big players were active, and that actually is helpful because it helps you anticipate where the market is likely to react again. Now, another thing that I wish I knew when I started is that every strategy, and I mean every strategy, has ups and has downs. In more than 16 years of trading, I've never seen a strategy that just wins no matter what. It's because markets change, volatility changes, behavior changes. So sometimes you'll have great months and sometimes you'll hit a rough patch, but that's normal. The key is not to panic. Stick to a strategy that you know is profitable in the long run. That's the key. To give you a real example, earlier this year I had a pretty rough period where no matter how hard I tried, most of my trades were losing or break-even trades. There were just a few winners, but most of it losing break-even trades. Terrible. But then the next month, the exact same strategy was bringing winner after winner. I was trading with around 90% win rate. It was amazing. But see, the strategy is the same. I haven't changed a thing. As I was saying, there is no strategy that would win all the time, but it's important you understand that and you accept that. Most beginners, they destroy themselves when they hit their first losing streak. They give up on the strategy, they start looking for a new one, better one, and then the cycle repeats over and over. New strategy, new losing streak, give up the strategy, find a new one, again and again and again. See, this is a cycle which is very hard to escape from. So, what do we do to escape that? How do we avoid that? The key is that you need to know your stats. You need to know what is normal for your strategy. For example, I know that historically my strategy produced the longest losing streak of 5 losing trades in a row. And I also know my maximum drawdown. And I'm mentally prepared if that happens again. At least I hope that I'm mentally prepared if that happens again. But I trust the strategy because I've seen its long-term performance, right? So here's the advice. Understand that every strategy has bad periods. You need to know your stats. If everything is still within your normal range, then do nothing and just stick to the plan. Don't jump to a new strategy. Confidence backed by real data, that's what gets you through the tough times. Now, one of the biggest mistakes I made when I started to trade was this. I was trading, but I wasn't recording anything. I only looked at the final result, profit or loss. But if you don't know why you won or why you lost, you cannot improve. You cannot fine-tune your strategy. You are just guessing, right? When I was testing new strategies in the past, I did it all wrong. I only watched the equity curve, and if it went up, then yeah, it was great. If it went down, I threw the strategy away. But this is what I realized later. Many strategies fail not because they are bad, but because we don't understand their strengths and their weaknesses. Maybe the strategy works great on euro dollar, but not on indices. Maybe it does well on Wednesdays and Thursdays for some reason, but performs terribly on Mondays. Maybe it needs different time frame. Maybe one small filter could turn it from mediocre to profitable. But the only way to discover that is with a proper trading journal. Real data, real tracking. When I didn't have a journal, I had no chance to improving anything. I was stuck in a loop with no progress, right? But journaling can really break that circle. And I know that traders hate it. It feels like extra work, it's boring, but if you want to get better, there's not really any substitute to that, so we kind of have to do that. And that's why today I track everything. I track what instrument I traded, which setup I use, time of the day of the week, risk reward, everything. And then I use those data points to analyze which market gives me the highest return, which days I perform the best, which setups have the best win rate, and so on. This is the path to improvement, right? Data-driven progress. Now, there's one more thing that goes hand in hand with journaling, and the thing is that you must have a clear trading plan, and you must follow it. Because if you don't follow your plan, then all that data which you collected in the journal becomes useless, right? It's not data about your strategy, it's data about random trading decisions. So if you want to test a system properly, you need to trade that system properly, right? Back when I started, I actually did write a trading plan. Most traders do, I think, at least a basic version of it. But to make real progress, your plan needs to be detailed. It needs to be crystal clear, no guessing, no I'll decide later. You need to have a written plan that tells you exactly what setups you use to enter a trade and how exactly the setup needs to look like, how to set a take profit and stop loss, how much risk per trade, how you manage the position, what you do when you are in drawdown, and so on. And then you need to follow it 100%. Only then your journal becomes powerful, because only then you get real data which you can trust. And I get it. This is another thing traders hate doing. Writing rules sounds boring. They want to skip straight to the fun part, which is placing trades. And that's exactly what I did when I started. I knew that trading plan and a journal were important, but I tried to do it, just a little bit, just the bare minimum, so I get to the charts fast, right? And the result? No progress. Now I know the simple truth. Without a detailed trading plan and a proper journal, you cannot really improve. So if you guys are serious about trading, then do this. Write a trading plan in detail. Follow it. Track everything in a trading journal, and then improve using your own data. This is how you turn your trading into a professional process. Another lesson I wish I learned earlier is don't get stuck on demo. Use it only to learn how the platform works and then move to real money as soon as possible. Because demo trading feels easy. There are no emotions, you don't care about losing fake money, and without emotions, almost anyone can follow a plan perfectly, right? That's easy. You hold your trades, you respect your risk-reward ratio, you let winners run, you don't hesitate. But once you go live, everything changes. With real money on the line, suddenly your brain starts sabotaging you. For example, on demo, you can hold a trade with a risk-reward ratio of, let's say, 3 or 4 with no problem. But live, your stop loss feels too close. Your take profit feels way too far. And the price moves in your favor just a little and you think, what if it reverses? Maybe I should take the profit now. And what you do is you break your rules. You cut winners early and your strategy stops working. Not because the strategy is bad, but because fear changed your behavior. This emotional pressure never shows on demo account, right? But I have a little trick for you. The thing is, even trading micro lots will trigger emotions. Even risking a couple of cents or a couple of dollars, it is enough to feel the fear. So if you want to learn real trading psychology, you must trade real money. Even if it's just a couple of dollars. So don't delay it. Open a small account, train with real money, micro lots, few cents per trade, small risks, but real emotions. That will give you a massive advantage over anyone still stuck on the demo. Now, another thing I had wrong when I was beginning was an idea of turning a small account, let's say $1,000 account, into a huge one. Because people on the internet claimed that it was possible. But there's a slight problem. To get there, you would need insane leverage, insane risk, and insane luck. And the probability that you will blow up your account would be really high. When I started, I actually did this. I took big risks and by some miracle I was able to make hundreds of % gain in just a couple of months. But I think that it was more luck than skill, I think. Under normal circumstances, it's almost impossible to turn a small account into a huge one that you can live off. So I don't say it's impossible, but very few people can do this. And they need to be very lucky, I think. But if you want to trade for a living, you need access to bigger capital. That's the bottom line. You need a bigger capital so you can trade properly without excessive risk and without gambling, right? Now let me show you something. This is an interactive table that shows how much money you need to trade with to reach your monthly goal. So let's say that your monthly goal is to get $5,000. If your strategy has 10 trades per month, and win rate is 65% with a risk-reward ratio 1, and if you risk 2% of your equity per trade, then this is how much you need to risk for one trade. And this is the required account size. If you want a professional income, you need a professional-sized account, tens of thousands of dollars. And let's be honest, most beginners don't have $80,000 or $100,000 sitting around to trade with. And even if you did, letting a beginner risk that kind of money, that's dangerous. So, what's the solution? The solution is the prop firms. Prove that you can trade responsibly, then they give you real capital to trade with, and you keep a big portion of the profits. Back when I started, prop firms were not really a thing, and I had to look for private investors. That took me time, it was slow, painful, and it was complicated. But today it's much easier. If you can trade, you can get funded and turn trading into serious business quite quickly. And if you want to help with that, that's exactly what we do in our Funded Trader Academy. We meet with traders every day in a live trading room. We prepare them to pass funding challenges, help them scale up, and we help them stay funded. Let me show you where you can join us. So if you go to my website, which is traderdale.com, and if you click this button, which says FTA, stands for Funded Trader Academy, then it will bring you to this page. In here, you can learn more about the Funded Trader Academy. Here are the mentors. Here are some testimonials. And up here, there's a button which says Talk to a Mentor. And in here, you can schedule a call with one of us who'll walk you through the service, and then you can decide whether or not this is right for you. Now, let's do a little wrap up. If I had to start trading all over again, these are the 6 lessons that I would drill into my head from day one. First, indicators won't save you. You need to learn to read the market, not just decorate your charts. Lesson number 2. Every strategy has ups and downs. This means that you should trust your strategy through tough periods. Don't jump ship too early. Lesson number 3. Journaling is your fastest path to improvement. Track everything. Data is your edge. Lesson number 4. Follow a detailed trading plan, because discipline beats intuition every single time. Lesson number 5. Demo is not real trading. To train real emotions, you need to risk real money. It is simple as that. Lesson number 6. You don't need big capital to start with. You need skill first, then you can scale up with prop firm capital. If you apply these, you'll avoid years of wasted time, money and energy, and you'll improve faster. So that's about it, guys. I hope you liked the video, I hope you found it useful, and I'll be looking forward to seeing you next time in some next video, and until then, happy trading.